This is Strategic Hedging with Options and Futures, the E-mini Nasdaq-100 Futures contract. This video is for educational purposes only and not investment advice. The E-mini S&P 500 Futures contract, symbol /NQ, was introduced in 1999 by the CME Group. It was introduced in order to give traders an accessible futures product that tracked the Nasdaq-100 index. This futures contract has a tick size of 0.25 index points, which means that there are 4 ticks per point, and each tick value is equal to $5. Therefore, 1 full point is equal to $20. In order to calculate the contract size or notional value, we multiply the value of the NQ futures contract by the 1 point value of $20. Another way to think about notional value is to recognize that one NQ futures contract is equal to roughly 822 shares of QQQ, the Nasdaq-100 ETF. So let's hop into the Thinkorswim trading platform here and check out /NQ. I have NQ populated in the trade tab here, and the current price of the index is 24,032.50. And in order to calculate the notional value, let's multiply that times the contract multiplier of 20, where we get a contract value of $480,650. And in order to compare this notionally to QQQ, which is the Nasdaq-100 ETF, we're going to take that notional value and divide that by the current price of QQQ. We're pre-market here, so I had to populate the Qs in the trade tab to get the current price of that ETF. So we're going to divide the notional value divided by the current price, which is 584.82. And we're going to get a notional equivalent of just shy of 822 shares. Like the other E-mini futures contracts, the E-mini Nasdaq-100 futures contract trades nearly 24 hours a day, Sunday to Friday, between 5 p.m. and 4 p.m. Central Time, with a maintenance break between 4 p.m. and 5 p.m. So we can see here that this product has quarterly expiration cycles with contracts listed in March, June, September, and December, with the most trading activity concentrated in the front month contract. A word about margins. To place a futures trade, I only need to put up the required trading margin, which in futures is much less than the full contract value. Margin is the amount of money a trader must deposit in order to open and maintain a futures position. There are 3 types of margin: initial margin, maintenance margin, and overnight margin. Initial margin is the amount required to open a position, while maintenance margin is the minimum balance required to keep the position open. If the account falls below this level, a margin call occurs. And some brokers have separate overnight margin, which is often higher, and you always want to confirm requirements with your specific broker. So let's hop into the Thinkorswim trading platform here to see what the current margin requirements are for /NQ. I toggle the downward arrow here, and I'm in the Futures tab, where I'm going to scroll down and highlight /NQ. And we can see here that the initial margin required to open a position in NQ with one contract is $35,900. So what are the advantages of trading the E-mini Nasdaq futures contract? Well, an obvious advantage is leverage. You can control large notional value with a relatively small amount of margin. Next would be tax efficiency. In the U.S., you get 60/40 capital gains treatment via Section 1256 in the tax code. And for more details on that, consult your accountant. There are liquidity benefits to trading the Nasdaq futures. They trade in extended hours. And finally, hedging. NQ can be a core instrument for hedging larger portfolios with heavy tech exposure. A word about risk management. Risk management is crucial when trading futures due to the leverage involved. You want to be cognizant of position sizing. You want to consider using stop-loss orders. And of course, you need market awareness when trading these contracts. In summary, the E-mini Nasdaq-100 futures contract is one of the more dynamic futures markets in the world. It offers traders and hedgers exposure to the leading technology companies that drive global markets. With high liquidity, leverage, and extended hours, /NQ provides opportunities, but also requires discipline and careful risk management. If you're new to futures or have a retail-sized portfolio, I would suggest starting with the micro Nasdaq futures contract before exploring /NQ. These contracts move the same way, but /NQ carries 10 times the exposure. This video is for educational purposes only and does not constitute investment, financial, or trading advice. No recommendations to buy or sell securities are being made. All examples are hypothetical and for illustration only. All investments carry risk, including the possible loss of principal. Options trading involves significant risk and is not suitable for all investors. Past performance is not indicative of future results. Consult a qualified financial advisor before implementing any strategy and review your financial situation, risk tolerance, cost, fees, and tax implications. Options trading requires broker approval, and not all strategies are permitted in all account types. Returns shown are hypothetical and not guaranteed. Market conditions may change quickly, and results will vary based on market performance, timing, and execution. Read characteristics and risks of standardized options from your broker or at www.optionsclearing.com before trading options.